Hello, Wolfpack. It's been a bit of an interesting kind of question in the cryptocurrency community over the last couple of months as we get closer to the all-time highs that are going to be the final all-time highs of this cycle for Bitcoin and Ethereum. And that question is whether we will see lengthening cycles or a plain 4-year cycle theory. Now, a lot of people, well, to be honest, off the top of my head, the only real person I can think of that thinks we're going to see extensive lengthening cycles is Benjamin Cohen. He's definitely the loudest of them, at least. There's many of them, but he's probably the loudest guy and the guy with the most traction who says that we're going to see lengthening cycles. And I think that's because of his appeal. He's pretty entertaining, pretty funny bloke, and also the fact that he has a mathematics background, from what I've gathered. And so, those numbers and those charts he shows attract a lot of people. But I think, I disagree with him. I disagree with him, just plain and simple. Now, before I even get into why I disagree, I want to say that my analysis on Bitcoin is actually a lengthening cycles theory. Right, it's a lengthening cycles theory by about, let's go to the daily chart and we can actually get a look at how far. Off the top of my head, I think it's about 2 weeks. Let's see, so 19 days. So 19 days, right? So in my opinion, the cycles are lengthening by 19 days each cycle. So technically that's the lengthening cycle, theory, right? So I actually do believe in lengthening cycles, just not anywhere near to the same extent as where Benjamin Cohen believes it, right? He believes that the cycle is going to go into well into 2022 and possibly into 2023. Whereas I'm saying that, hey, it's just going to lengthen by about 3 weeks, right? And the reason why I say that is because, I'm just extrapolating the data, right? I'm extrapolating the data from 2 sample points. And yes, 2 sample points is not really enough sample points to be absolutely certain. That's why I said my price predictions are always a rough guideline. But I think that's the most likely occurrence. So 113K by January the 6th. For Bitcoin, and then for Ethereum, it's 9 to 13K by February the 3rd, right? And the reason why it's 9 to 13K rather than precise price predictions is because we literally only have one data point. So you literally, no matter what you do, you can't really be precise with Ethereum. Yes, you could use Fibonacci, but I mean, I prefer to just do it the natural way like this. And I know that, Benjamin Cohen thinks that Bitcoin's going to go to around, I think he said in the past, anywhere from around 120 to 140K, he said was most likely. And he said deep into 2022 or early 2023. And, I just purely, plain and simple, disagree with that. Plain and simple, completely disagree with that. And there's multiple reasons why I'm going to get into those reasons right now. Benjamin Cohen is basing his analysis off of, mathematics off of the fact that, we've had lengthening cycles from the bottom and from the halving in the past. He's extrapolating that data, and he's also taking into account that, hey, as an asset gets larger and larger and larger, it's going to take a lot longer to move because it needs more money to move. And I completely agree with that. And that's why I've added 19 days to each cycle. And I've also diminished returns heavily, right? My returns are diminished from 54% each cycle, right? So in Q4 in 2013, we went up 774%. In 2017, 352%, right? In a little bit longer, in a little bit longer there. And then this cycle is only going to be 157% in Q4. So diminishing returns are 100% a thing, right? For those of you who don't believe in diminishing returns, I seriously do not know what to say to you, right? If Bitcoin went 774% up in this Q4 like it did in 2013, let's check out what that would be. That would bring us to a price point of around 400K, right? And these are where these 400K price points are coming from. It's from people who don't believe in diminishing returns, but it fundamentally doesn't make sense not to believe in diminishing returns. Like, it's not even one of those things where I'll be like, oh yeah, I might be wrong. No, diminishing returns exist. 100%, they exist, right? As an asset gets larger, it becomes harder to move, and therefore it doesn't move as much, right? That's just common sense, right? It's happened in 2017, happened in 2013. It happens every single cycle, and it also becomes longer. The moves take longer, and that's why I've added 19 days. So lengthening cycles and diminishing returns, I fundamentally agree with, and Benjamin Cohen also agrees with things like that. I'm using Benjamin Cohen as an example for all lengthening cycle theory people. Even though I think the cycle is going to lengthen by 19 days, I don't want to call myself a person who believes in lengthening cycles theory, because 19 days is really not a significant number. I mean, over a long period of time, yes, it is a significant number, but I mean, I think when you call yourself a lengthening cycles theory person or someone who believes in lengthening cycles theory, you're talking months at least, right? So I don't necessarily agree with that. And I want to get into a fundamental reason why I don't agree with the lengthening cycles theory, and that is because everything that's happened in previous bull markets has happened in this bull market, right? Everything. All right, so we can go back. We've got the bull market support band up here. We could see that in September 2013, we retested the bull market support band before going higher, right? And we also had a red September. We bottomed out in around July. What happened in 2017? Well, we had a bottoming out in July. We had a red September. We retested the bull market support band. This year, bottomed out in July, had a red September, retested the bull market support band, went higher. All right, that's just off the tip of the iceberg. I could also get into how every single late October we have a correction. I can get into how every single May/June we have a massive correction. I can get into how every single December we have a top. This cycle it's going to be January, early January, due to the slightly lengthening cycles. But the point of the matter is everything that's happened in this cycle has happened in the last cycles to the date. So why would the end date continue? Doesn't make sense. Think about that. If every single thing that's happened in this cycle happened in the last cycles at the exact same or very similar dates, why would the end date of this cycle be different? It simply doesn't make sense from a fundamental perspective. All right, so there's the technical perspective, and also from the psychological perspective. If everyone thinks that it's going to top out in December, or in my opinion, early January, which is basically December, it's probably going to top out in December or early January. Think about that for a second. People in this market literally have the ability to change the realities by their buying or selling in masses. So if, the vast majority of people think 100k exactly is going to be the peak, everyone's going to sell at 100k exactly, and hence 100k exactly will be the peak, right? The sort of psychological aspect is actually way more powerful than people think. And I think the problem with Benjamin Cohen, the problem with people who do lengthening cycle theory based on intense mathematical analysis, right, is because they don't take into account the psychological element in the market. And the market is literally just human psychology painted out on a chart, right, over and over and over again. So I think that for lengthening cycles theory, you really are taking into account data that, yes, may be correct. His data is definitely correct, right? He's very experienced with mathematics. But, you're completely missing the human factor of the market. And the human factor of the market is 100% there. Otherwise people wouldn't be able to manipulate the market. We've all seen manipulation in the cryptocurrency market. That wouldn't happen if, emotion didn't exist, if human psychology didn't exist. And so it clearly does. And so it clearly will have an effect on the market. And so we clearly will be topping out, most likely in early January, right, according to that theory. And that's the fundamental 2 points, right? We have the fact that, well, everything that's happened this cycle happened in the last cycle at the exact same dates, so why wouldn't the top be the same? And we also have human psychology. The vast majority of people believe that Q4 will be the top or early Q1, and hence it will. Right, so those are 2 points, and you could argue against those points quite easily, but they're actually very, very convincing points. Think about as well, which is the 3rd point, right? The market manipulators. Right, what do they want from cryptocurrency? Okay, and what have we seen historically? Market manipulators, and frankly, me as well, want cryptocurrency to repeat over and over and over again every 4 years in exactly the same way, in exactly the same pattern, so they don't even have to think about it. They can just make money by copying a formula. Right, think about it. If you knew that every 4 years in a cryptocurrency run, you're going to have a red September, right? You're going to bottom out in July, and then you're going to head up in Q4, and you're a market manipulator who literally controls how the market works, why would you not want to continue that trend? Because you can still take advantage of human emotions, right? You can still fool people into it not happening, right? Then thinking it's not going to happen. Why do you think so many people were calling for 20k up until like 2 weeks ago, right? Because they were fooled by thinking it would not happen again. And so it seems very obvious to me that it in fact will happen again, right? Because these institutions, they don't want the market, and these market manipulators, whatever they are, right? They don't want the market to be unpredictable. The whole point of them manipulating the market is so they can acquire Bitcoin at a cheaper price, and hence they want the market to be predictable as possible so they can schedule it and coordinate these attacks, right, very clearly and openly. And I think the people who argue against those 3 points I've given, right, to clarify the 3 points, actually, before I do that, let's look into Ethereum. Because it's not just Bitcoin that does the same thing every single cycle. Yes, we've only had one cycle on Ethereum, but it's pretty clear it's done the same thing every single cycle, and it probably will continue to do that, right? At least, well, the fundamental point of this video is at least we don't have any reason to believe, based off what's happened historically, that it won't continue to do the same thing. It's not that it will continue to do the same thing forever. It's that we just simply don't have any evidence that it will do something different. And I think that what Benjamin Cohen is doing, what lengthening cycle theory people are doing, they're actually betting on something that is hasn't happened yet. So they're betting on an anomaly, right? Whatever that word is, basically means you're betting on something that hasn't happened yet, hasn't occurred yet, and hence it's more unlikely for it to happen, right? A one-off occurrence that hasn't happened yet, right? The reason why that is not logical, in my opinion, is because the whole market, everything we do in cryptocurrency, every single thing we do in terms of the charts, is relying on previous trends to predict the future. That's literally the whole thing. That's the whole game. That's it, right? Past trends, you use those, you use the patterns from the past, we use results of the patterns from the past for data from them, predict the future. So, using everything from the past that we've seen, the future is what I've predicted, right? 113k by January the 6th. Obviously, it's going to be a little bit rough because we only have 2 data points. But the point of the matter is we won't be extending into 2023, right? Based off, what's happened in the past. So, yes, theoretically, yes, he could be right. Yes, lengthening cycles theory people could be right? I'm not saying they can't be right. Of course they can. But it just seems counterlogical. And it seems like one of those things as well that if they are right, it actually doesn't affect us. Right, because we can just buy in 10% higher when we're disproven. So I don't really see, and this is the thing as well. I get a lot of people, whenever I change my price predictions slightly, it's like, yeah, I'm changing my price predictions because I'm an analyst. I take into account new data and adjust my previous, records based off of that. Right, that's what you're meant to do. You're not meant to just, oh yeah, I predict Bitcoin to go to 40k and then just stick by that whatever happens and don't take anything into account and then just leave it at that, and then when it gets disproven your career's over. No, you're meant to be constantly adjusting. That's what the market's about, right? Constantly adjust to new things to happen. So the thing of the matter is that it won't actually affect us at all if lengthening cycles theory is correct, because what we can do is as we get closer to our dates, as we get closer to February 3rd and January 6th, and as we start seeing, hey, this probably won't play out, we can just adjust based off that data. So we're not actually, affecting our investments based off that. It's literally just speculation of the future that doesn't actually affect us. So personally, I don't think it's a massive deal. I actually don't think it's a big deal at all. But if I had to choose, I would say 100% that, yeah, I think the 4-year cycle theory with slightly lengthening cycles and diminishing returns is playing out for sure, right? And that's why I've got these price points here. But as for Ethereum, it's just adding to the evidence, right? In Ethereum, what did we see? Well, we saw here the top in May, right? We saw the top in May, we saw the bottom in July, we saw the top in September, we saw a breakthrough in November. What did we see? Top in May, bottom in July, top in September, bottom in late September, and breakthrough in November, right? Same thing. Literally the same thing. You can even look at the shape, and the shape is the same. We have a weird W with a shorter right side of a W and then a breakout. Right, weird W, shorter right side of a W, and then a breakout. It literally looks identical. So does Bitcoin. So does every coin that's been around for more than one cycle. So I don't know. I guess my main points, as I've said multiple times, is historical trends, human psychology, and the manipulation. And it seems logical. That's enough for me to kind of convince myself that, hey, I don't think we're going to be extending this cycle into 2023. It just doesn't make sense to me. It goes against my whole mindset when I'm investing, my whole strategy. I don't want to bet on things that haven't happened yet. It's the same thing with the super cycle. People thinking it's going to be a super cycle or a golden cycle, whatever that is, right? Where Bitcoin just keeps going and it just doesn't stop, right? Because this is where we're getting adopted into the world now, so we're just going to keep going. Yeah, I'll believe it when I see it, right? I think it's going to happen eventually, but I'll believe it when I see it, because why should we bet on that happening? Because all that's going to do is let us hold through the drop, right? If we think that, yeah, it's going to be a super cycle, 100% super cycle, then when the drop comes, we're just going to be holding our bags and we're just going to be down 50% when it actually doesn't happen, right? So I'd rather sell when I think the top's in, and then if it keeps going, just buy back 10, 20% higher. Right, what are you risking? 10, 20%. You're also saving yourself 90%. Right, so that's my kind of thesis, my kind of, what I'm thinking about Bitcoin, what I'm thinking about lengthening cycles. Hope you enjoyed. Let me know what you think, of course, and thanks for watching. I'll catch you in the next one.